the run-up to November 15, which has become the cut-off date for the valuation with regards to the buyback of bad debts by AMCON, we saw a significant run-up in the index, almost 250 basis points. We think that may begin to slow in today's trading because primarily a lot of that was given to the fact that the AMCON had said it was going to value those share-backed assets based on a premium of 60% on the average 60-day price over the 60-day period from November 15. So we think that that significant run-up in the last week of trading should begin to slow, somewhat from today's trading.
Of course, heading into this week, we had lots of rumblings around possible suitors for eligible banks in Kenya. We heard news of foreign suitors having emerged for Bank PHB and Union Bank. Any developments on that front as yet?
A lot of what has come through, in the public domain remains largely scripted scripts from the respective banks. None has come forward with any categorical statement with respect to who those potential acquirers or merger parties may be. I think the only one that has essentially been largely still remains a rumor, but more likely true than not is that of FCMB and Finbank. Union Bank issued a statement to the fact that there are talks ongoing with some interested party who may be an equity group, a private equity group in consortium with some other people. PHB has also indicated that they are in talks with some serious parties. Same goes for Oceanic, but none has publicly declared any MOUs or announced any strategic partnerships as yet.
When it comes to Union Bank, I mean, we're looking at the speculation of that takeover being implemented by a group of private equity investors, as you've highlighted. Market reaction to that, which is now going to be a conglomerate of a partner, if we can call it that.
Well, I think the first things first. We don't think that there's going to be any major M&A activity without some kind of resolution regarding the equity of this these institutions. I think that is where AMCON does come in. AMCON has given itself a December 31 cutoff within which to engage in some kind of transaction with these banks. So even though talks may be ongoing, we don't think there will be any significant headway made between now and December ending with respect to these banks. Union does look attractive from a historical standpoint. You look at the quantum of the assets on its books, but then again, a lot of that needs to be verified, as it were. Some kind of due diligence has to be carried out with each of those institutions to ascertain that those assets are not overstated or that the liabilities are not understated. So we are not sure anything will happen in the latter half of this, in the part of this year. Possibly Q1 we'll begin to see some definitive statements made with respect to this M&A activities.
Just looking at the status of things as it stands right now, we've got Afribank, Oceanic, Intercontinental and Finbank all speculated to be in talks with local players right now. What are you making of the foreign interest that's been shown specifically to Bank PHB and Union Bank?
Well, I think if you look at it from a strategic entry point perspective, any international bank looking to gain inroads into Nigeria will look at what would be the best value proposition from a significant point of view. From a strategic point of view, I mean to say, I think one of the first key things you'll be looking at, for example, will be what kind of assets these institutions possess, and then you'll be looking at things like strategic geographical positioning in terms of market location, distribution, because clearly whatever strategy the banks would choose to adopt will be dependent on the retail distribution network. So I think obviously looking at the Union Bank and a PHB, you find that these two banks present those kind of opportunities to any such acquirer.
Let's shift focus to Wema Bank, because it's the only one of the distressed banks coming up with its own solution, if we can call it that. It's raised funds and is scaling down to survive. Do you see the restructuring of Wema Bank as a regional bank, which has significantly lower minimum capital requirements than national banks, a real and viable solution?
I think the strategy adopted by the management at Wema Bank was one that was forced by a number of factors. One obviously being the time constraint. The bank obviously would have preferred, in my opinion, to potentially continue as business on an international scale, quote unquote. However, given the time constraints with respect to capital raising, I think the bank opted to do a regional banking route. If you think about it strategically, it was much easier to raise 15 billion naira against having to do 50 or 25. They have obviously done a rights issue through which they have allegedly raised 7.5 billion. That is subject to verification by the CBN. But then again, if you look at the distribution of that bank in terms of where its businesses lie, the bank is present in the key markets in Nigeria, which is Lagos, Abuja, Port Harcourt, which, if you aggregate, those segments of the banking, market account for, nearly 70% of all credit origination, and in some cases, more from a deposit standpoint. So, if the bank chooses to stay, largely in the southwestern part of the country, Lagos alone, which accounts for close to 60% of both of those, indices, I think they should be able to do good business if they can get the strategy right.